What is going on, investors? Hopefully, you guys had a great week out there. That is right. It is Friday, and it is time for the Fang Stock Recap Show here on the Investor Channel, where every Friday we recap all the major Fang stocks, all the news that happened with all of these stocks, and then we look at it from a technical perspective as well. There are timestamps in the description below if you want to bounce around to the certain companies that you want to see. Not only that, I'd love to have you follow me on Twitter and Instagram. Those links are in the description below. My apologies, this video is uploaded a little late. As you can see, I'm in Las Vegas, and let's just say last night went on very long. So my apologies, a little bit of recovery time to get the Fang Stock Recap Show. Let's not waste any more of your time. And look, it's Friday night in Vegas, so you know I'm going to go get busy here in a minute. Let's kick things off with Facebook. Started the week at 328, melted up nicely, but then boom, fell off a cliff down to about $324 per share. Now, this happened to Google as well, and I want to talk, we'll talk in depth about this story. This is probably the biggest story that we had other than Tesla earnings this week. And so I will talk about this when we get to Google. I'll talk about this a little more in depth because I have a lot of knowledge. In fact, I was on a call yesterday with Google. I talked to Google for about an hour about the ads that I am running. So I know a lot about what's going on in the online advertising space. Well, unfortunately, yesterday for Snapchat investors, that company reported earnings that absolutely disappointed the street. I think Snapchat was down it was down 26%. 26% in one day. That's also another reason why we preach here on the Investor Channel. Invest in gold medal winning companies. A company like Snapchat is destined to win a bronze medal at best in the online advertising game. Okay, so no criticism of the website, no criticism of what they do over there at Snapchat, but let's be real. Facebook and Google are quite frankly going to be the leaders. Now, when Facebook and Google report earnings next week, could they potentially drop 20%? Well, that would be interesting, and I sure as heck think that would create some buying opportunities. But those stocks were both off 5 and about 3% during the regular trade today. And this all revolves around another one of the FANG stocks that we'll talk about here in a second is Apple. So what Apple did is, and if you're an Apple user, you have been seeing, they've been asking you every time you open an app, do you want to be tracked? Do you not want to be tracked? And the way they worded that like text bubble, you almost are always clicking, I don't want to be tracked. Doesn't sound like a good idea. I don't want to be tracked. So used to be that if you had Facebook app downloaded on your phone, Facebook was able to see what websites you've been to, where you'd been. They basically get this whole digital signature about you. Well, Apple iOS released several months ago actually closed a lot of those loops. And so what it is doing for online advertisers like myself and many others out there, it's getting harder to track where the click came from, how the click is converting, how much I should pay for that click. And that is the basis of online advertising, okay? And that's what's made online advertising so popular. It's not like putting up a billboard out here in Las Vegas or putting an ad on TV or in a newspaper where it's actually a little bit difficult to judge the effectiveness of that ad. Online advertising is all about knowing the customer, knowing where they've been, knowing how you can retarget them with more ads. And Apple's iOS has just made that harder, and we definitely saw it with Snapchat, and it dragged down the industry from Twitter to Pinterest to Google and Facebook, and obviously Snapchat just got obliterated, down 26%. Now we'll talk a little bit more about this here in a second. Here's the reference to Snapchat going down. Now here's the other really interesting news this week. So former President Trump is planning on launching a new social media site or a website or an app, maybe all encompassing of that, called Truth Social. And this is going public via a SPAC deal. And that's, I don't have the ticker up on here, but this deal went like parabolic today. They halted the stock multiple different times because investors are very excited about this. And why wouldn't you? Look, I think people are watching this. You might be able to criticize. I think everybody, whether you like former President Trump or you voted for him or you didn't, there are ways you can criticize criticize them. And look, that's just being human nature. Everybody has their faults. And certainly former President Trump was more than willing to voice his opinion and come across as brash a lot of times. But put all that aside, the man was extraordinarily successful, okay? To become president of the United States is one thing. To do it when you had never had a career in politics was also very, in my opinion, just something that is extraordinary. You just don't see it very much in today's age. And so people are actually, and when you look at the stock performance of the SPAC that is taking his True Social business public, well, it's gone parabolic. And so people believe in what he potentially would do. Now, here's the hangups is probably hosting this because Google has a cloud hosting business. Microsoft has a cloud hosting business. And Amazon has a cloud hosting business. And that those companies are going to want nothing to do with this site as long as President Trump is involved. And I think that will probably be the largest hurdle for this site is actually finding big enough servers to host it and allow it to potentially compete. I don't know if the word potentially compete with Facebook, but maybe give a little bit of an alternative that President Trump thinks needs to be out there. Former President Trump. Facebook, this was an interesting story. Facebook to rebrand the company. And look, the Facebook app and Facebook.com is not going to rebrand. Think of this as how like Google, we often refer to Google on this show as Google, but actually the company that owns Google or the parent company of Google is actually called Alphabet. And so that is what Facebook is looking to do. They're looking to get a new parent company name where Facebook, Instagram, and WhatsApp are underneath that, since I think they realize Facebook in some circles, especially when you get close to Washington, D.C. and wherever regulators are, they tend to want to come after them, and maybe they see some success that Google has had to changing their parent company's name to Alphabet. Now, Democratic senators urge Facebook to stop their Novi project. This was essentially kind of a cryptocurrency payment form of currency. And it used to be called it used to be called Libra. Now they're calling it Diem. And excuse me if I'm pronouncing these wrong, but here's the quote that I want to read you. This is coming from Senator Elizabeth Warren and Senator Brian Schatz, who are both Democratic senators. Here's the quote inside of their request. They said, Facebook cannot be trusted to manage a payment system or digital currency when its existing ability to manage risk and keep consumers safe have proven wholly insignificant. So here's the deal. That is incredibly rich that they say that Facebook cannot manage a payment system from two senators who have been around a really long time in Washington and have mismanaged the finances here in the United States to the tune of multiple trillions of dollars in debt. I just found that incredibly ironic. So more news on the cryptocurrency over at Facebook. It looks like they potentially might be able to tap Coinbase, which advanced 4%. Coinbase stock has been on fire. It's up over $300. This is a stock that I bought. I think I bought it maybe at $250. I think I even did a video and recommended that I thought that stock was bottoming. And, here I am patting myself on the back. But when I do get it right, I like to do that. But Coinbase stock has advanced. And I tell you what, if they can integrate with Facebook's project there, I think that will be good. Now, Facebook is to hire 10,000 people across the European Union to build the metaverse. So I like Mark Zuckerberg's vision for Facebook, okay? He's not sitting back and relaxing and saying, we got everything that we need, and we're just going to kind of slowly and very lightly integrate on the Facebook platforms and the Instagram. No, he wants to push the envelope. He envisions this metaverse thing where you're going to have avatars, you're going to have like a virtual 3D environment where potentially, this is just me speaking off the top of my head, that maybe sometime in the future, you put on like a Google Glass or a VR headset and you go into a room or a concert with people and you experience that concert digitally and you're buying things with tokens. You are represented by an avatar avatar. Maybe you can buy yourself some special clothes or get yourself in a special section. Okay, just like you do that in the physical world, there's concerts and all kinds of stuff going on here in Vegas. People do that in the physical world. Mark Zuckerberg's vision is that we will be doing that in the digital world. And if you think about that, there's not a lot of companies that are on the cutting edge of that. Not only the cutting edge of that with their Oculus and their virtual reality. So Facebook can tie that in, but they also have all the users. They have all the people. So they can put you all together. And they also have a ton of businesses that advertise with them as well. I actually think this is a good idea. How long or if that is the future of the internet will remain to be seen. Now, moving on to Apple, who just put the kibosh on Facebook and Google and the online advertising system. Again, we'll talk about that when we get to Google earnings here, or Google News here in a second. $143 per share is where Apple started. End of the week at about $148. Really interesting from a technical perspective. You're going to want to hang around for that as well. Now, Apple to add more shops inside Target stores in time for the holidays. It's a win-win for both companies, okay? Target's got a solid brand, and they're able to probably lease inside their stores. This is kind of a Best Buy model. Lots of stores outside the United States run on this model as well. They get the big box, and then they rent it out to different either apparel makers or, in this case, an electronics maker. I love that Apple, that may not be as close to you as some other cities. Maybe you got an Apple store in your city. Maybe you don't, but maybe you have a Target. It might give you access to their products. Now, what we talked about last week was Apple was coming out with these new MacBooks. They came out with new AirPods, another HomePod in different colors. I tell you what, these MacBooks, and then they are designed for the pro users, because I think most of them are starting in the over $2,000 price tag, some as high as $2,500. Now, I got on there. I told you I was going to buy one, and unfortunately, I fibbed a little bit. I ran through all the specs, and it was it was like $4,000. And I hadn't gotten paid yet. So I was going to wait till I got paid, and then I will get the new MacBook. So I had to lug my big, gigantic computer down here to Las Vegas, but no more. These MacBooks are for the pro users. I would expect a big I would expect a big upgrade cycle into them. When you look at the specs of these MacBook Pros, if you do video editing, code compiling, really professional type stuff, or you're maybe doing it for a job or your self-employment, these MacBooks, I think, are virtually a must if you have the money, though. Okay, a $4,000 laptop sounds a little ridiculous, but when you factor in how much time it will likely save you, time is money, remember, and $4,000 certainly probably will be well spent there. Now, moving on to Amazon. So the week about $3,400, dipped down, okay? Thought maybe this would drift a little higher, and it did kind of intra-week, but this one fell off the cliff as well, down to about $3,335 per share. I love this story. So Starbucks and Amazon are reportedly to have talks. There's no agreement here, but they reportedly had talks on starting a lounge concept. So what Starbucks is interested in is Amazon's walk-in and cashier-less system that allows you to walk into a store, grab items off a shelf, and walk out without having to check out. You just grab the items you want and you go. It's called Amazon Go stores. There's many here around the country. And what I've always told you here on the Investor Channel, this is Amazon's business model, is they create a technology stack. So let's say AWS, okay? AWS, which is the cloud computing service over at Amazon, they created that because on Black Friday and Cyber Monday, Amazon.com crashed. So what did Amazon have to do if they didn't want their website to crash? Well, they had to buy a bunch of servers, okay? And they realized, oh, wait, we bought all these servers. They only get maxed out 2 days a year, 3 days a year, and then we have them sitting around doing nothing. Well, let's lease that out into, let other people use those. They integrated third-party sellers onto Amazon.com, where it's not just Amazon selling the goods, it's people like me that have goods to sell, and I sell on Amazon as well. Now, and the same thing is going to happen with the Amazon Go concept. They'll lease it out to Starbucks. They'll lease it out, or license it out is probably a better term, to maybe even like a 7-Eleven. Okay. Amazon will build out some of their own stores. They'll probably put this technology in Whole Foods as well. But a customer like Starbucks would be really interesting and would prove the use case of this. And I think encourage other businesses to call up Amazon and say, hey, we want some of that technology as well. Now, Amazon, no surprise here, going to hire 150,000 seasonal employees across the United States for the upcoming season. We'll see if they're able to get to that number. Moving on to NVIDIA, start of the week at 218. Thought this could break up, pretty much did. End of the week at about $227 per share. Now, NVIDIA stock is boosted to a buy by Summit amid crypto rebound. So we talked about this here on the channel a little bit, especially when we do NVIDIA's earnings. So NVIDIA groups their earnings. They have an automotive, which is a very small segment of their earnings. Then they have the data center, and then they have gaming. But what people don't, maybe, I think most of you understand this, but some people might not understand that the gaming chips, the same chips and graphics cards that they use for gaming, are used in crypto mining. And NVIDIA chips and graphics cards are very, very, very popular for crypto mining. So as you know, and may or might not know, Bitcoin has been on a monster run over the last few weeks and certainly resurged interest into that. And that certainly can help NVIDIA because people are going to, the higher crypto goes in price, the more people that get interested in it and more people might want to potentially mine it using NVIDIA chips. Now, NVIDIA unveiled its next generation cloud system. This GeForce Now RTX 3080 delivers cloud gaming's highest resolution and fastest frame times with the lowest latency. I haven't played enough games, but I understand what's going on there. That's if you're a hardcore gamer, all of those things are what you want. The highest resolution, you want the fastest frame rate so things aren't kind of like shaking around on your screen, and you want the lowest latency because you might be playing somebody across the world or you might be in a very, very intense competition. And these performance are nearly 3 times that of the recently released Xbox. And so NVIDIA's, man, I like NVIDIA's in a lot of hot sectors, okay? They're in personal computing, they're in data, but they also are in crypto and video games as well. That's why we really like this company. Now, moving on to Alphabet, parent company of Google, started the week at $2,830 per share, ended down at, just like Facebook, fell off a cliff, not as much, down about 3%. I'll talk about why potentially that is a good thing for Google. Now, before we get into that, let's talk about Pixel 6 smartphones with custom silicon were released. Those are actually pretty reasonably priced phones, $600 to $900. I tell you what, if you're not in the Apple ecosystem, these Pixel phones look like what I would go to if I was an Android user. Now, the last thing I want to say, our top story was, again, Snapchat, their earnings and their troubles managing the new iOS and tracking their users and giving that data to their advertisers so they're comfortable with their ad spend. Well, it sent all these stocks in a tailspin. Now, Google held up a little bit better, and that is because a large part of Google's advertising is already intent-based. So when you type into a search engine, you know, best restaurants near me or best movie theater in my area, and so you're actually feeding Google some information. They already know your intent, and so they have advertisers that want to advertise to that intent. Whereas Facebook and maybe Snapchat are really trying to pick advertisers that you visited in the past, but that maybe you could potentially have interest in. You haven't necessarily shown interest in them, and especially if they can't track you along your other apps and your web traffic. Well, they're now having to kind of push ads to you that might not be well targeted. When I type in best restaurants in Las Vegas, guess what pops onto Google? Very high rated restaurants, and I kind of pre-qualify that. I would tell you that, in my opinion, if we see a pullback in these stocks, I think Google is the most well-positioned to come out on the other side of the iOS change, well ahead of Facebook and Snapchat and the other social media players. Now, do I think all of these players will develop technologies and tracking systems to not necessarily get back to where we were, but to get back relatively close? Absolutely. They will do this. Okay, this has happened. I've been doing online advertising on the internet for over 15 years now. It is the same story. There's always changes, either from Google's end or Yahoo's end or Bing's end, and now this time we've gotten the software from Apple is always making changes, and then the industry kind of catches up and gets back to work. Now, let's move on to Microsoft. Start of the week at 303. We thought this one could break up. It did. We're marching into earnings, so it's a little conservative, but up to about $309 per share. No real news out of Microsoft. Next, on to Tesla. They reported, in fact, they were the first to report of the major FANG stocks. And I've been telling you for how long here on the channel that I thought this stock was going to get to 900. And look, it's a little bit of luck. It's a little coincidence. But when we talk about stocks from a technical perspective, it's more about probability, okay? When you get certain formations, in Tesla's case, we'll see it here in a second, on their technical chart, well, they got in an upward channel and it just had a high probability of just keep continuing inch above that. And there we are at $909. We'll talk about that from a technical perspective. Could we go to 1,000 here soon with Tesla? Now, Tesla races to all-time highs as the profitability story takes hold. We did an extensive video on Tesla. I'll try to include a link to that in the description below. Tesla had fantastic earnings. We were all very aware of the cars that they delivered and the mix of that, but the profitability over at Tesla, they did a magical job controlling cost, and things are looking great from that perspective. Now, Tesla is upgraded by S&P Global to very close to an investment grade rating. This could potentially allow Tesla to borrow more and more money at really low rates. Now, here's the interesting thing. When we did the Tesla report, there was a blurb. There was like 2 or 3 sentences in there saying, we don't need to raise money. We don't need money. We're going to be able to invest in our company without having to raise more money. And in the past, Tesla raised a lot of money, typically by selling the shares of Tesla. Well, maybe in the future, Tesla wants to do an acquisition. Let's just dream right now, and they want to buy Mercedes, or they want to buy Volkswagen, or they want to buy Volvo or Ford or GM, whoever they want to buy. Well, how are they going to finance that? They have plenty of cash, but they would need a boatload of cash to make an acquisition like that make sense. Well, they're going to be able to do that by borrowing money. And if you have investment grade credit rating, you have banks lining up down the street looking to lend you money. That's the Google chart. We'll get to that in a second. Moving on to Facebook. Started down here. This is from a technical perspective. We're sitting right here at 324. We're basically in a range, okay? And the upper end of the range right now is about $329 per share. The bottom is about $315. You break below $315. I'm not convinced. I am just not convinced. We're not going to retest this $300 level, okay? Is the probability somewhat high? Yes, because we actually made a lower low. Well, there was a sign of reversal when we came up to the 340, which we had marked out already as an area of resistance, and we got rejected. In fact, we gapped down. Here we are. And, you know, your other level where you could potentially buy this one on the way down is right in at 315, maybe even as high as 320 on this one, if you want to jump the gun on Facebook. Moving on to Apple. This one's in a really interesting technical position. As you can see here, we're hitting our head right on the top of our range, right at $150 per share. The stock's actually sitting closer to $148 per share. But what you're looking for with Apple is exactly what happened the last time it broke above 150. It put this big old green candle there, and that was your buy signal, okay? You went from 153 on this one all the way up to about 155, 56 on that one, maybe even 158 on this one, and then it climbed all the way down here, retested 139, back up here. Wouldn't surprise me if this just hangs out there till earnings and then decides to go one way or another. If we pull back after Apple's earnings, we're looking for buying opportunities below 140. If we break above 150 on some solid volume, well, I tell you what, you can play that breakout trade, okay? Because you'd want this to get above the previous highs, which are sitting here at $157 per share. Now, the other thing more broadly that I'm just seeing going on with Apple is we got something like this going on. And so this stock could just continue to bounce upwards, in my opinion. Now, moving on to Amazon. This one we thought would walk all the way up to 3,500. It didn't quite get there. In fact, it was like maybe about $100 short, $150 short, and now we're retesting this lower end of the range, right about $3,300 per share. You break below 3,300, they put out some bad earnings next week or something like that. Well, I tell you what, you got 3,100 and potentially $3,000 in play. Anything lower than $3,000 is an absolute stone cold buying opportunity for Amazon. Moving on to NVIDIA, doing exactly what we thought it was going to do last week. Don't always get these right, but we're getting these ones right. This one walked all the way up into our area of resistance, right up here at about $230 per share. And it's just going to, look, we're going to monitor this on Monday. You break above 230 on some volume. Remember that NVIDIA reports in November. So we've got 3 or 4 weeks before NVIDIA is going to report. You break above this, and then you've got momentum, and you've got clear skies ahead. A pullback is no big deal with NVIDIA as long as I think you'd want to stay above that level, which is $210 per share. So you'd like the stock to come back. It could get even lower than that. We're really just kind of walking up this trend line here. And so I think potentially if we get rejected here at 277, we could come back down here to, we'll call it 211, 215, and then this thing could continue its uptrend, no problem. Moving on to Google, this uptrend is so steep and has been intact for so long with Google, we can't fit it all on the screen, but this stock also did what we thought it could potentially do. Usually I give you 2 options, and I'm not trying to like talk out of both sides of my mouth. I know that all of you are watching this from a different angle. Some of you have maybe bought Google a long time ago and you're looking for an area to take profit. Some of you don't have any Google shares at all, or maybe you have a small amount and you want to buy more. So that's the angles I'm usually talking about when we look at these types of things. Now, we walked all the way back up here, and back when this stock was down here, we talked about how it was going to back test this lower line. It came all the way up here to about 28.75 and then got rejected, and now we're working our way back down to 2700, which is an area of support with Google. If you like Google, wouldn't necessarily want to step in there before earnings, but if for some reason earnings come out and this stock stays at 2700, that should prove to you it's actually a pretty strong area of support. And what I think with Google, and I actually think it would be very healthy if we just sideways consolidate on this one. And we consolidate between, 2,700 and up to about 2,950. I think that actually would be healthy for the stock as we move forward. Moving on to Microsoft, again, we thought potentially we break above 305, and then, that's what we did. In fact, we put a couple green candles and they're all making higher lows, and so this one looks like it wants to run. Now, if you want to trade this one, say you got a couple shares and you're like, I want to trade Microsoft, I follow it all the time, make a quick buck off it. Well, I tell you what, you can buy somewhere in here, and your stop loss, you're not going to guarantee make money on every trade, but you always want to make sure you lose the minimum. I would put a stop loss some down here at 305. You break 305, this stock's going lower, but now 305 looks like an area of support, and who knows how high Microsoft can get in the coming days. Moving on to Tesla, which we've been very accurately giving you, a really clear picture on this one. I'm going to take out this lower trend line. We don't need that anymore. Now we're peaked our head above this $900 level. We've been calling this $900 level at Tesla since probably like 4 or 5 weeks ago. Okay, once this upward channel started, it looked really, really bullish, and then once you got above key areas at 720, key areas at 800, and now we're up over 900. But one thing that I do see with Tesla is the move has gotten a little parabolic. I mean, we're like doing something like this. So I'd expect this stock to, at the very least, start flattening out. Now, what also you might be wondering is, look, what if we break above 900 and we come up here to, we'll just call it like 925 or something like that. But then we come back down. We pierce through 900 and we come back down. No real big deal, okay? As long as the bottom line of this channel continues to hold, I actually would expect Tesla to come back down here and test this, okay? So there's your buying opportunity for Tesla, is any kind of pullback into this area of our upward channel. And I just showed you probably the mother of all like literally the mother of all uptrends is when we looked at Google. I mean, look at this gigantic uptrend that it was in for basically a year. So when these stocks break out, they can absolutely run. Not necessarily saying that what could potentially happen with Tesla, but the company does have a lot of wind at its back. Happy Friday, everybody. Hopefully, you guys have a wonderful week out there. We'll be back next week with our normal setup back home, and hopefully things will get a little bit back to normal. We've got a big week next week. Got earnings for basically all the major FANG stocks, and we'll talk about that and more next week on the FANG Stock Recap Show. Thank you for joining me today. Good luck with your investments.